They say the future is transparent. Gauzy Ltd, an Israeli tech company, is taking that literally. They're about to go public, offering investors a piece of their vision, a world where any surface can become a screen. Imagine windows morphing into interactive displays, car windshields transforming into augmented reality dashboards, and store shelves becoming personalized advertising platforms. This isn't science fiction, it's Gauzy's reality. Gauzy's IPO is more than just an opportunity to cash in on a hot tech trend. It's a referendum on the future of displays. Will we be glued to our phones and laptops forever, or will the physical world around us become the screen? Gauzy is betting big on the latter, and their IPO will be closely watched by investors and tech giants alike. But is Gauzy's vision clear, or are they looking through rose-colored glasses? Their technology is cutting edge, no doubt, but turning that tech into profits is another story. The IPO market is a fickle beast, and even the most promising companies can stumble. This isn't a game for the faint of heart. Investing in an IPO is like betting on a horse race. You need to know the horse, the jockey, the track conditions, everything. And even then, there's always an element of luck. Buckle up, because Gauzy's IPO is about to take us on a wild ride. The rumor mill is churning. Gauzy's IPO is the talk of the tech world. While details are still under wraps, whispers suggest a valuation north of $1 billion. That's a lot of shekels for a company that's still in its early stages. Gauzy is planning to list on the Nasdaq, the stomping ground of tech giants. They're hoping to attract big institutional investors, the kind who can provide the fuel for their ambitious growth plans. They're betting that their story, a blend of cutting-edge tech and a massive potential market, will resonate with Wall Street. But the IPO market is a different beast altogether. Investors are skittish, valuations are volatile, and even the most promising companies can struggle to make a splash. Gauzy will need to convince investors that they're not just another tech flash in the pan, but a company built for the long haul. They've got the technology, that much is clear, but can they execute? Can they scale up production, navigate the complex world of global supply chains, and fend off competition from deep-pocketed rivals? These are the questions that will make or break Gauzy's IPO. So what exactly does Gauzy do? They make something called smart glass. Think of it as regular glass, but with a layer of liquid crystal film sandwiched in between. This film can be controlled electronically, allowing Gauzy to turn any glass surface into a transparent display. The applications are mind-boggling. Imagine walking down the street and seeing ads on shop windows that change as you walk by. Or picture yourself driving a car where the windshield displays navigation instructions, real-time traffic updates, and even entertainment. This isn't some far-off future, it's happening right now. Gauzy's technology is already being used in a variety of industries. Car manufacturers are integrating it into their vehicles, retailers are using it to create interactive displays, and architects are even using it to build stunning light-filled spaces. The possibilities are truly endless. But the real question is whether Gauzy can maintain its technological edge. The world of tech moves at breakneck speed. What's cutting edge today could be obsolete tomorrow. Gauzy will need to invest heavily in research and development to stay ahead of the curve and keep its technology from becoming yesterday's news. Gauzy's financials are, well, a bit opaque. As a private company, they haven't been required to disclose their numbers publicly. What we do know is that they've raised significant venture capital funding, indicating investor confidence in their potential. Revenue is growing, but it's still early days. The smart glass market is still in its infancy, and Gauzy is competing with larger, more established players. They'll need to rapidly expand their customer base and drive sales to justify their lofty valuation. The good news? The market for smart glass is projected to explode in the coming years. Research firms are predicting a compound annual growth rate that would make even the most jaded investor drool. If Gauzy can capture even a sliver of that market, they'll be laughing all the way to the bank. But growth comes at a cost. Gauzy will need to invest heavily in manufacturing capacity, marketing and sales. They'll also need to navigate the complexities of global supply chains and manage their cash flow carefully. It's a high-stakes game, and Gauzy will need to be firing on all cylinders to succeed. Gauzy isn't the only player in the smart glass game. They're up against some serious competition, including multinational corporations with deep pockets and decades of experience. These giants are circling the smart glass market, eager to get their share of the pie. Some of these competitors are focusing on specific niche markets like automotive or architectural glass. Others are taking a broader approach, developing smart glass solutions for a wider range of applications. Gauzy will need to differentiate itself from the pack by offering superior technology, competitive pricing, and exceptional customer service. One key advantage Gauzy has is its agility. As a smaller, nimbler company, they can move quickly to adapt to changing market conditions and customer needs. They're not bogged down by bureaucracy or legacy systems, which allows them to be more responsive and innovative. However, Gauzy's small size could also be a disadvantage. They lack the brand recognition, distribution networks, and financial resources of their larger competitors. They'll need to be strategic in their partnerships and alliances to level the playing field. Investing in any IPO is risky, and Gauzy is no exception. There are cracks in the glass that investors need to be aware of before they dive in. The first, execution risk. Gauzy's success hinges on their ability to execute their business plan flawlessly. The smart glass market is still evolving. There's no guarantee that it will live up to its hype. Gauzy is betting big on a technology that is still relatively unproven in the mass market. If the demand doesn't materialize, Gauzy could be left with a lot of expensive inventory and a shrinking window of opportunity. Then there's the competition. As mentioned, Gauzy is facing off against some of the biggest names in the tech and manufacturing industry. These companies have the resources and the motivation to crush smaller competitors like Gauzy. Finally, there's the regulatory landscape. Smart glass technology is still relatively new, and regulators around the world are grappling with how to regulate its use. Changes in regulations could impact Gauzy's ability to sell its products in certain markets, which could have a significant impact on their bottom line. So, is Gauzy a good investment? The answer, as with most things in life, is complicated. There's no doubt that Gauzy is operating in a market with enormous potential. Smart glass has the potential to revolutionize the way we interact with the world around us. If Gauzy can successfully navigate the challenges ahead, they could be sitting on a goldmine. Their technology is impressive, their management team is experienced, and they have a clear vision for the future, but there are also significant risks. The competition is fierce, the market is still unproven, and Gauzy will need to raise significant capital to fund its growth plans. Investors who are considering buying into Gauzy's IPO need to be comfortable with a high degree of risk. This is not a stock for widows and orphans. This is for investors who understand the potential rewards and the very real risks of investing in a company that is still in its early stages of growth. Gauzy is a gamble, but it's a gamble that could pay off big time for those who are willing to roll the dice. Don't just take my word for it. Investing in an IPO is a big decision. You need to do your own research, read the prospectus carefully, and understand the risks involved. Talk to analysts, follow the industry news, and get comfortable with the company's financials. Look beyond the hype. Every IPO comes with a healthy dose of hype. Don't get caught up in the excitement. Focus on the fundamentals of the business. Does Gauzy have a viable product? Can they scale their operations? Do they have a path to profitability? Think long-term. IPOs can be volatile in the short term. The stock price could go up or down significantly in the days and weeks following the offering. Don't panic. If you believe in the long-term potential of the company, hold on tight and ignore the short-term noise. Remember, investing is a marathon, not a sprint. Gauzy's IPO is just the starting line. The real race is just beginning. Choose wisely, invest carefully, and buckle up for what's sure to be a wild ride. Thank you for watching our IPO coverage. Don't forget to subscribe to our channel for more updates on upcoming IPOs, market analysis, and investment insights. Hit the subscribe button and turn on notifications so you never miss out on our latest videos. See you in the next one.